Good evening. Thank you for being with me. This is Christopher Aaron. This is our normal broadcast for Wednesday evening covering the price of gold and silver. There was a rate hike today, the 15th of March, by the U.S. Federal Reserve. Let's look at that. We are following the prices of the metals here. This is a very important time. We've had 3 rate hikes. These are the first 3 rate hikes that we have had over the last 10 years. So if you've only been following the metals for 2 or 3 years, you have not yet seen the metals really in a rising rate hike environment. And this is rather new, what has been happening over the last year. And I think it makes a lot of sense to pay attention to the patterns that we're seeing develop here in the metals. Now, looking at the markets, this is the action after the Fed rate hike today. Amongst various asset classes that I generally follow on a regular basis, when was the Fed rate hike? The announcement came at 2 p.m. today. Just look at the market reaction to this. Now, mind you, the standard narrative being given by the mainstream media is that rate hikes are bad for precious metals. Bar none. You look at any major publications, whether it's Barron's or Forbes or Yahoo Finance or CNBC, every single guest that goes on these shows will tell you that rate hikes are bad for precious metals. Why? Because they strengthen the US dollar. If this is bad for precious metals, I say please bring me more pain. Look at the action here. The gold mining complex up over 7.5% today on the day of the rate hike. Silver up almost 3%. Gold up almost 2%. The rest of the commodities and U.S. stocks kind of matching one for one here, up just a little bit under 1%. So when you see gold and silver outperforming the rest of the commodity complex, you know there's something going on here which is not just a commodities phenomenon. It's not just an industrial phenomenon. And of the major asset classes that I'm following right now, what was the one thing to be lower? Well, it's the one thing that the mainstream media would tell you should be moving higher on a rate hike, and that is the US dollar. Down over 1% today. Let's put this in perspective. Let's look at the metals themselves. Here was the action in gold. Very clear, the rate hike announcement there. The shot higher, finishing about $20 higher on the day for gold. Silver, really nice move, finishing about 40 cents higher on the day for spot silver prices. Let's put this into perspective here on the gold market. Now, here's the important point to keep in mind. We're just going to look at gold in this video. We've been focusing on silver over the last couple of weeks. Let's look at gold. Let's look at the big market that really is the most important of the precious metals markets to follow if you're invested, including primarily in silver. The gold market being many hundreds of times the size of silver. So where gold goes, silver is going to go over the long run. The major thing to take away from what is occurring right now in the gold market is you have the beginning of this pendant formation forming here between the low for the bear market of 2015, followed by this low here in December of 2016, coming down with the downtrend from 2011 to 2017. These lines will be meeting. You can see that here by the end of the year. This is setting up to be one big move in whichever direction that it moves when it breaks one of these lines. And in my experience, when you have this kind of formation setting up in a market, it tends to break 2 to 3 months before the actual convergence of the pattern. So I would tell you, now actually mind you, this chart here did not update with today's price action because it only shows on stock charts, the site that I use, it only shows the close of the COMEX, which closes around 2 p.m. and gold moved a lot higher after 2 p.m. So right now we have gold back around 1220. The point of this here is really to not get too concerned. I believe even with the rate hike today, we will see a lot of choppy action over the next several months, perhaps with a slight up bias over the next couple months, then maybe a slight downward bias over the summer. I do think the mining equities are going to be sniffing out what is going to be happening here. Whichever way this breaks, this is going to be extremely important to follow because there's going to be a move of several $100s higher or lower depending on which way this moves. My perspective as a trader and investor is I want to be right on the direction of the market. Ultimately, I don't care which way it moves. So if I think it's going to be moving lower, I will be telling people that. As of the present moment, we have had 3 rate hikes. The first rate hike was here in December 2015, corresponding with this low. The second rate hike corresponded with the low in 2016. And the third rate hike should correspond with this important low here. We have 3 higher lows on 3 rate hikes. When you consider that rates could be rising for the next 10 to 20 years, of course in a series of waves, higher and lower, but that rates could be rising for the better part of the next 10 to 20 years as they have fallen for over 30 years, I think this pattern is of utmost importance to pay attention to. I do not know that many other people who are focusing on this in this kind of way. So get ready. It should be a rather exciting remainder to 2017. Do not worry about the short-term action until we see a break of one of those trend lines. And I do believe we will have signals ahead of time from the GDX, from silver, from a look at the short-term treasury market. We will have a good idea of that. That is what I discuss in the premium service that goes out weekly to people. We try to focus on these moves ahead of time. I do work with a select number of individuals covering unique situations on a one-to-one basis. I wanted to make a special announcement at the end of this video. I've had a number of requests to do an analysis on the Commitment of Traders report. There is a report, it's called the Commitment of Traders, and a number of individuals have been discussing this Commitment of Traders. There's been some analysis published on it, and I believe the analysis that is being published in the precious metals community is faulty. I think it's misleading. I'm not saying that I think the individuals saying this analysis are intending to mislead you, but I do think that their analysis is faulty. And so I'm going to be releasing, this should be released tomorrow on Thursday. I'm going to release a special video. This will not be a regular update. This is a special video that is going to show why the analysis that you may have seen recently on the record short position in the Commitment of Traders report, in the silver market especially, is not negative as is being discussed in other corners of the precious metals investment community. I'm going to show this very clearly in no uncertain terms. So please look for that video coming out sometime tomorrow on Thursday. And until next week, I thank you for joining me. It's an exciting time to be in the precious metals, and I'm glad to have us all together here.